Okay, so we all know that housing in Australia is bloody expensive. What I'm going to explore in this video is exactly how much since 1980 has housing costs increased. Is there a difference between houses and apartments? What about different cities? And what about rent? This is based on two reports coming out of the RBA and the Crawford School of Public Policy at the Australian National University. So let's start with a look at the history of house prices. Basically, yes, your grandparents are wrong. Houses are a lot more expensive today than they were in 2000 or in the 1980s. The real median house price, so that is accounting for inflation, otherwise known as avocado toast, doubled between 1980 and 2003, and then doubled again between 2003 and 2022. So buying a house in real terms costs 4 times as much now as it did in 1980. When we break things down by capital cities, we see some interesting things. While broadly all cities saw a quadrupling of prices over time, there are some cities that really pushed for extra marks. Hobart, for instance, managed to triple its prices since 2003, and God knows they don't need any more encouragement for families to live together. Melbourne managed to grow its prices 30% more than Sydney, which may be surprising to many of you, as Sydney has a beautiful reputation for being one of the most expensive places on earth, and you're not wrong. The difference is in how much a house cost in 1980, where Sydney, overperforming as usual, simply started way more bloody expensive. The only other interesting thing of note is that Perth prices since 2003 have only increased by 64%, which would be nice if you were willing to move there. Now, for apartment prices, they tell a similar but slightly different story. Prices doubled between 1980 and 2003, but only grew on average by 60% between 2003 and 2020, which explains why everyone wants to buy a house as opposed to an apartment for an investment property. The only real difference here is that Adelaide prices managed to quadruple since 1980, which surprises me, as it implies a lot of people not only wanted to move to Adelaide, but wanted to live in apartments there. I can hear the cries now though. Well, things are a lot nicer today. Houses are bigger, they have better amenities, renovations, etc. And you know what? They're not completely wrong. Once we account for quality changes, don't ask me how the math works out on these calculations, real house price and unit prices only rose by about half as much. So, you're only doubly as worse off as your grandparents instead of quadruple. Progress! Now, let's look at affordability. On the surface, things are not so bad, with the rate of ownership dropping only 3% from 1980 down to 67% from 70%. However, this disguises massive generational changes, as despite an aging population, the rates of ownership of those 65 and older have increased from 80% to 82%. Now, to what I'm sure is a shock to everyone, all other generations have seen a very significant decrease in housing ownership rates. Those between 25 and 44 went from an average ownership rate of 66% to 51%, a 15% decrease. Back in 1986, 26% of those aged between 15 and 24 owned a house. That's right, a quarter, although some of this may be due to genuine differences between generations, such as marrying later and divorcing more, which the RBA estimates has reduced ownership rates in younger generations by like 2 to 3%, which is a lot, but doesn't explain these very large falls. Other differences are things like increasing amounts of tertiary education that delay income, and immigration, as permanent residents who arrived between 2000 and 2012 had an ownership rate of 50%, well below the average. But there is clearly a lot left unexplained by generational differences, and once again, I hear the cries. Apparently I need better insulation. That despite housing costs in real and ideal terms twice as much as they used to, record low interest rates means that they are still just as affordable as ever. And you know what? They're not super wrong, just holistically wrong. While the RBA only offers data going back to about the year 2000, here we can see that up until recently, record low interest rates have meant that mortgage serviceability as a percent of the median household income has fallen in capital cities from about 50% to 30%. Additionally, since 2011, an increasing proportion of that mortgage payment is not interest, but principal. So while it may be technically easier to afford the interest rate, this ignores the fact that Australians will still be taking on an ultimately magnitude greater amount of debt in the long run. Additionally, as anyone with a mortgage can attest to, interest rates can change, and the doubling or quadrupling in prices, depending on how you measure it, means that interest rate changes are doubly to quadruply as painful as they used to be. This is not to mention that even before 2022, the time it took to afford a deposit had increased by about 40% between 2000 and 2021, from 5 to 7 years. So, situation not great. Now finally, let's look at rental affordability, ending on a happier note if we just ignore the last 2 years. On average, over the last 40 years, real rent prices have increased by 0.5% per year, which is pretty low. Now, that might not feel right for you, for a few key reasons. First, this data does not include 2023, when rents really shot up. Second, when I say real rents, that is how much rent prices rose above inflation, which in the long run should account for general wage increases, but as we are all acutely aware of, has not been true for the last 2 years. Finally, advertised rents are way higher than the rent most people pay. This also goes to show how extreme the 2023 rent rises were in comparison, with between June 2022 and 2023 an 11.5% increase, or even when accounting for inflation, still a 5% increase, which is about half of the growth of rent rises in the last 2 decades. However, another way of looking at it is rent as a percent of income. The median renter pays about 21.5% of their equivalized disposable income as rent, and that hasn't really changed over the last 20 years, where equivalized disposable income means post-tax income accounting for money sinks known as children. And notably, this does not include rent assistance. But there remains an open question as to why, if rents have not really changed over time, why have they just started accelerating? Well, not the focus of the paper. The authors argue rents have not changed because the amount of dwellings have met, if not marginally increased, relative to the population, with a small increase being due to rising incomes. Very recent increases in rent are likely due to the significant falling vacancy rates, which in 2023 is about 1% or lower compared to most of the 2000s, where it was close to or above 2%. Anyways, that's an overview of prices and affordability over the last 40 years. Hope you enjoyed.